Since it was founded in 1975, Vanguard has been one of the most beloved brokers on the market. They have over 50 million customers worldwide at the time of recording, and hold around $8.6 trillion worth in assets. So I think it's fair to say that they're doing alright for themselves. But while everything might seem rosy on the surface, upon closer inspection, there actually seem to be some glaring issues. So that begs the question, why does everyone love Vanguard so much? Let's investigate. We'll start with one of the main reasons why Vanguard are so popular. "Don't look for the needle in the haystack, just buy the haystack" was a direct quote from the founder of Vanguard, John Jack Bogle, and it speaks volumes of the approach that they have to investing. Vanguard encourages their customers to set reliable and attainable goals, buying entire markets rather than picking individual stocks, with the aim being to either retire early or enjoy your retirement without having to worry about your finances. This is the ethos that they started the company with back in 1975 and is still going strong today. In that time, they've only had 5 different chief executives, with the previous one, Tim Buckley, actually having worked his way up from being the founder's research assistant. This level of consistency and stability will no doubt play a huge part in people's admiration for the company. And along with the astounding $8.6 trillion they currently hold in assets for their customers, Vanguard is, and perhaps rightly so, considered to be one of the most reputable brokers on the market. But that doesn't mean they're perfect by any means, as you'll see a little later in this video. Vanguard is also loved by the FIRE movement, which stands for Financial Independence, Retire Early if you're unfamiliar, and this community appreciates Vanguard for their approach to investing, as well as their low fees. Or should I say, apparent low fees. We'll get to that as well. The FIRE community is a group of investors that all share a fairly extreme approach to saving and investing, where they've been known to put up to 70% of their earnings away per month. Why are they relevant here? Well, it's simple. They're quite a vocal community in the finance space online, and being vocal about Vanguard in a positive light helps to spread the word about their reputation. Vanguard has even endorsed the movement on multiple occasions, writing articles about fueling the FIRE movement and offering advice on how to manage your finances in retirement, and even straight up telling you how to join the movement if you want to retire early. It seems that this focus on retiring early and making a better life for yourself is one that has captured a lot of investors, making Vanguard the poster boy for brokers across the world. Their approach to crypto investing is interesting as well, with them not wanting to include crypto in any of their funds as they didn't believe that there was an appropriate role for cryptocurrency to play in long-term portfolios. This is a stark contrast to key competitors like Fidelity and BlackRock, who both jumped at the chance to launch funds based on Bitcoin's spot price, setting Vanguard apart from the rest in terms of their long-term and lower risk approach to investing. Another reason Vanguard is so popular is because of how they simplify the approach to retirement saving. They offer ready-made funds that allow you to invest into a diversified portfolio without having to build it yourself, with minimal investing knowledge required, and they even tailor these ready-made funds for specific investing needs. For example, you have their target retirement funds, which allow you to put a date on when you'd like to retire, and the fund will adjust itself to match your needs. So say you invested into a target retirement fund 2055, so aiming to retire roughly 30 years from now, your portfolio would start off as around 80% stocks and 20% bonds. And this is to allow for a more risky investing approach with the potential of higher returns. As the years go by and you get closer and closer to your set retirement date, the weightings would adjust to be closer to 50-50 in stocks and bonds. So your investment takes on less risk as you approach retirement, giving it less chance of falling at the last hurdle. All of their funds also have a risk rating as well on a scale from 1 to 7, with most of their funds falling between the 3 and 6 range in risk. And this helps investors understand exactly what they're investing into and how their money could be affected. Vanguard is also technically owned by their investors, with profits reinvested in order to keep their fees low for customers, with their average fund fee being 0.08% against the US average of 0.48%. But despite a number of good things going for it, as well as a commendable approach to doing business, it's not all sunshine and rainbows. Vanguard is an American company, and it makes sense that its primary target market is, well, Americans. And this has been their main focus since starting out. However, since opening their UK office in 2009, UK investors haven't been given the same 5-star treatment as those across the pond. You see, as an American investor, you can utilise all of Vanguard's features without incurring any annual fee for doing so. Whereas in the UK, every account type will come with a 0.15% annual fee. The difference between having a fee or no fee can add up to significant differences in compound value over time. And this fee also leads to a really strange situation. Investing into Vanguard funds through Vanguard's own platform is often more expensive than investing into Vanguard's funds via one of their competitors. In the past, there have even been occasions where competitors have offered Vanguard funds that Vanguard's own customers haven't been able to invest into. Now, a 0.15% annual fee doesn't make Vanguard the most expensive on the market, but certainly means that Vanguard is nowhere near the cheapest broker across any of their accounts for investors in the UK. This fee is capped at £375 a year, which means it maxes out after your balance exceeds £250,000. But even this cap is higher than a number of competitors. So why have they done this? Well, it seems as if in order to continually offer low fees to the American market, they've charged a fair whack for their services elsewhere, and this theory might have some substance to it. I mentioned that Vanguard are technically owned by their investors. Well, let me rephrase that. Vanguard are technically owned by their American investors, meaning that Vanguard in the UK is also owned by American Vanguard investors. So this could mean that the American customers/owners are prioritized in order to keep their owners and customers happy, which does make sense, but kind of sucks for us proper British chaps. This favoritism does go deeper too. For example, US investors have had access to a mobile app for years that allows them to make and track investments on the go, whereas we're still waiting for one to be released. We tried out their testing version of the app on our channel recently, and it didn't exactly look like it would be ready for release anytime soon. This might seem like a small privilege, but in reality, it's not. It's basically become par for the course now that brokers offer an app experience for their customers, even if some customers prefer not to have an app so that it helps them forget about the value of their portfolio during the highs and lows of the market volatility. And this isn't the only thing that Vanguard are missing too. They currently don't offer a lifetime ISA, nor a junior SIP, which their main UK competitors do offer. And you also can't receive contributions into your Vanguard SIP from your employer, which again is something that Vanguard are lacking when it comes to some of their competitors. To put things simply, Vanguard is like the Apple of the investing world. They have an extremely loyal, almost cult-like following who can sometimes look past the negatives because they like the company so much. They might not be as advanced as these new online brokers in terms of their offerings, but they do have a reputation behind them that makes them one of the most reliable and trusted brokers to this day. And just like there's nothing specifically wrong with Apple, there's nothing necessarily bad about Vanguard. It's just that there might be better options out there for some people. If you want to see our thoughts on one of Vanguard's biggest competitors, I've put a review on screen now.